What's up? It is Max back again for Monday the 8th or 9th with another weekly forecast. Feeling pretty good about seeing some more upward movement, but I'm going to make a bold prediction, and yeah, we're going to just go for it. I'm going to try to make this one quick. I've already got it planned out. Look, here's the problem with Bitcoin right now. I mean, there's not really a problem, but we're approaching levels that we're seeing a lot of confluence line up at. First off, see this 315 level right here is basically the high. It's a support and resistance level. And I don't know why I'm on OKCoin futures because there's not enough price action, but 315 is a huge level. Likewise, 305 is a huge level because it is a ICT bearish order block. Last week we were talking about what? We were talking about taking profits because of these ICT order blocks, right? Which is just the body or the lower candle on the green candles prior to a convincing move downwards. And what happened is we did react to that price. And what we did is we retraced from this swing low, which we pointed out in earlier videos. We said this is a key swing low. We're looking for an optimal trade entry to enter in here. I made a chart on TradingView about it. And yeah, you can actually see a chart on TradingView that says, yeah, this is the buy zone right here. It's perfect low, boom. We blew out these order blocks. So what does that mean? That means that we're hunting for more, upward targets. This is the next target that I don't want to be messing around with at 307 on the futures. And it's support or resist or support right here. Yeah, so 307. Don't want to be really messing around with holding too much longs at 307 to 315 on OKCoin futures. Another point of confluence is our equilibrium concepts. What is this? Well, perfect confluence at 315. That's going to be a 200% extension. That's going to basically mean that we've got a swing in this direction, and then we're going to get an equal and opposite swing in the other direction, and then we'll see some kind of reaction there, which is exactly what we did a couple weeks ago when we said right here, because there was order block confluence and there was also this swing right here, which was an equilibrium, which was confluence that called the top there. So 315 is just going to be sold by me very confidently. It's not to say that we could go up, but even this harmonic bull flag pattern completes right at 315. So 315 is basically like, if you are not selling some at 315, I think you're crazy. But that brings me to a very important topic, which is probably going to be the theme for today, is that there's two types of traders: reactionary and anticipatory traders. Most traders right now are reacting, right? So they're reacting to the breaks of this old high. So they're going to be piling on. I don't know if this thing is going to go up to 315 right away, even though I'm going to make a bold prediction in a couple minutes just for fun. Something that I just feel in my gut might happen. But aside from that, most traders are reacting. So when they see this break, they're going to react to that break and they're going to pile on longs. It's why we're not really retracing. I mean, the buying is pretty crazy. And it's just because people are just reacting, right? They see other people buying. They see this. They're not anticipating. They're not, right? So like when we make this high, they're not anticipating this being a high because there's order blocks here and that there's an equilibrium 200% extension here and all that stuff, right? They're not anticipating that they could pull a fib here and buy the optimal trade entry long in a bull trend, right? What they're doing is they're buying when other people are buying. They're reactionary. So they're going to be buying here. And also, there's going to be reactionary shorters that are just going to be shorting because they think it's cool to short in a bull trend when price is moving violently upwards. And, that's cool, I guess, but that's not what we're trying to do. And that's reactionary trading. Anticipatory trading is what we're doing right now. We see this target, and we're thinking, okay, it's when price gets here, whenever price gets here, we're going to be sellers. And the reason we do that is because this is how markets move. It's going to be the smart money that's going to be taking profits at key levels. They're going to get their profits first because they anticipate these key levels. What that's going to do is they're going to take profits. They're going to dampen the buying pressure. They're going to overwhelm buying pressure. And then what do you think all these reactionary traders that were buying here are going to do? At the first sign of the trade moving against them, they're going to react and they're going to sell here. That's going to cause more people to sell, more people to sell, more people to sell. And that's how reversals or retracements happen, right? So people are buying up here, but then when the trade goes against them, they just panic dump, and then that's where we get our perfect fills. Likewise, when we break these resistances, people are going to panic buy, and that's when we get our perfect fills. And if price does go up here, it's going to be a wick. You're going to have a limit order. It's going to be anticipatory. It's not going to, a reactionary trader is not going to be able to sell at 315, in my opinion. I think it'll wick up there, much like it kind of wick down into the OTE, and then will reject. Now that's a less probable scenario because we are going. That's a counter trend prediction, whereas this was we're going with the trend basically. So when price goes down in a bull trend, it's going to be met with a lot of buying. It's not as likely that when price goes up, it's in a bull trend, it's going to be met with selling, but 315 is a huge level. Like I said, this order block, and we've got these support and resistance levels, and we've got, just support, resistance, order blocks, and it's our equilibrium. If we, oh shoot, this doesn't even have all the price action, but it is an equilibrium. And so yeah, that's basically it. I just wanted to do the thought of the day as well. Thought of the day comes from George Soros in his book, Soros on Soros. And this is just really interesting to me. I don't study a lot of markets, and I certainly don't study any market as hard as I study Bitcoin. So I just get a kick out of it when like a billionaire investor that's made money in all kind of markets, his observations kind of line up with Bitcoin. It's just funny to me because my view of the Bitcoin market is just kind of weird. I just don't think it's real. Like Forex or stocks are real, but it is a real market, and it works just like any other market. And so what he says is basically, usually the process starts with a trend that is not yet recognized. And that is right here. This is the trend that is not yet recognized. And you could even say that like all this is the trend that's not yet recognized. Because a bunch of people were shorting here. So it starts with a trend that is not yet recognized. When it becomes recognized, the recognition tends to reinforce it. In this initial phase, the prevailing trend and the prevailing bias work to reinforce each other. I think it's kind of common sense, but it's kind of cool how he says it. Basically, the prevailing trend, the stronger the trend gets, the more people start to believe in it, and the stronger the bias gets. And they kind of work to reinforce each other. So he says, so the trend becomes increasingly dependent on the bias, and the bias becomes increasingly exaggerated. That's cool because basically he's saying the trend becomes increasingly dependent on the bias. So basically, at some point, the bias is going to kind of be pushing the trend to irrational levels, is what that means. And the bias becomes increasingly exaggerated. So we're getting further and further away from rational levels. During this period, both the bias and the trend may be repeatedly tested by external shocks. These are our external shocks, right? We came up here, we went down. This is what, $30, 290, 64? Yeah, $30. That's a shock. Then we kind of consolidated, gave people some time to second guess themselves, and we kind of wicked down. And then what happened? We broke out. What does he say about that? If they survive the test, they emerge strengthened until they become seemingly unshakable. We may call this period the period of acceleration. A point comes when the divergence between the belief and the reality becomes so great that the participant's bias comes to be recognized as such. We may call this the moment of truth. So what he's saying is, at some point, shit is just going to get so out of whack that there's going to be some smart people that realize, wait, this is not reality. This is stupid that price is up here. And they're going to start selling. That's going to be the moment of truth. And then eventually the loss of belief is bound to cause a reversal in the trend that had become dependent on an ever stronger bias. The trend reversal is the crossover point. Yeah. And so basically, smart money is going to sell. They're going to kill the belief that prices are going up. Once the reactionary traders have no reason to react to, prices going up, they're going to react to prices going down, and then it's just going to snowball and go down. So, and you can even see it here, really. What does Soros say? He says first is the stage where they don't recognize the trend, then it breaks out, and then you get some kind of test, and then once it proves itself to still be intact, people are going to be like, okay, cool, we're still in a bull trend, and having passed that test, people are going to be even more confident in the bull trend, and so that bias is going to feed the trend even more, even though that bias is getting based further and further on fantasy. So you're building a very unstable environment. Then what happens? Boom. This is just pure fantasy. And what happened up here is Coinbase, like reality set in. Coinbase came out and the exchange kind of sucked. It's not even available in all 50 states. Smart money was selling here. Then the reactionary traders, they came in and they said, okay, Coinbase came out, it was nothing special. Everyone started selling and it caused a huge crash. Now, I'm not expecting a huge crash here, but I am expecting that same concept. I think it's kind of fractal in nature. It's just psychology, right? It would probably work on an hour chart. But I am expecting that once we get to these levels again, that we're going to see a pullback to, I would say here. So basically what I'm thinking is like, this is now the key low in the market, this 263. This is the key low in the market. And I'm going to just assume that 315 is the high for the high for a while. And we see the confluence. We see the OTE right here at 283 to 274. That's where I'm going to be looking to buying. It's also confluence with this consolidation. So this is going to be my rebuy area. There's a lot of confluence there. There's also a lot of confluence to believe that 315 is going to be the top. And what else? Yeah, I guess that's it. And then like my bold prediction for that I was thinking about making is I think in the next couple hours, just that Soros passage had me thinking, I think we're about to reach the point of acceleration in the next couple hours. And I think in the next couple hours, we're going to wick up to 315 and then come down back into this consolidation for the rest of the week. And yeah, that's the bold prediction. I mean, that's super precise. If that happens, I'd probably be like the Warren Buffett of Bitcoin. And, or dude, I might be the George Soros of Bitcoin. George Soros is Hungarian and I'm part Hungarian, so I pretty much already am the George Soros of Bitcoin. But anyway, yeah, that's what I'm predicting, man. In a couple hours, I think it's just going to get exuberant, stupid, wick up here, harsh rejection, and then, what would it look like? It would be like, I think it's just going to be like, and then like boom, then like boom, and then we just do this for the rest of the week. And then we go to the moon, then the lunar launch starts. But I mean, the thing is, we are getting, far away from this fair value again. I think if we got to 315 right now, that would be too far away. It also is kind of like a 3 drives pattern. 1, 2, 3 drives into this old high. And that's basically textbook 3 drives pattern. And yeah, so we have to retrace sometime. Last thing, just want to talk about my awesome chart. When I made this chart, price was 272. I got greedy. I wanted to enter in at 267 just because I'm trying to win the bullseye of the fucking week on TradingView, and I want to get my profit and loss as low as possible. I mean, I want to get my risk reward as low as possible because that's how they judge the bullseye of the week. But I missed it, and now price rallied up $20. So what I'm expecting here, I mean, this is where I've outlined 2 equilibriums, 2 huge swings that might be filled in the coming month. This first equilibrium, pretty certain that we're going to see 320, and this is Bitfinex, so the ranges will be, or the prices will be different, but 320 on Bitfinex seems pretty good in the next couple hours, hopefully. But certainly this week we're going to see 320, in my opinion. But maybe not. Maybe I'm just totally wrong, and maybe this is the top, and maybe we're just going to go down. But I don't think so. And just the bear scenario, this is a shitty video, unorganized, but the bear scenario would be we're bullish until this breaks, until 263 breaks. So any down move we're just going to buy into. I mean, it's not that hard. So if this were to be the top, we would just be pulling our fibs from this key level. We could buy 273. Our stop loss would be like 262. That's just how you buy the dip. I mean, $10 risk reward. If you have a $10 stop loss at 273 and you're trying to aim for 315, even if it fails, you're just making so much money every single time you make that trade. But yeah, this is kind of what we're looking at. I just wanted to call your attention to my TradingView because my TradingView is probably the best TradingView account I've ever seen. Y'all should subscribe to it. But anyway, 320. Yeah, so we're talking about 320 going down and then boom, then we're going to consolidate. I think we might be reaching for this target, dude. This 420. 420 is a huge number in Bitcoin. I don't know. They're a bunch of stoners, but the market makers are stoners or something. But 420, the market likes 420. And the market also likes 320. So we want to see what happens at 320 first. But if we start moving above 320 and 320 axis support, we're starting in motion an even bigger swing than I think most people are ready to accept. I think we might be going up to 420. But I think that's all I got for today. How long was that? I don't know. Hopefully not too long. I think I felt like I rambled a little bit, little unorganized, but whatever. I think in the next few hours, boom, go up here, come down, and that'll be it for the day, or that'll be it for the week in terms of highs, in terms of profit targets. Then we'll just be looking to buy the dip. If my dream scenario doesn't set up, we're still gonna hold for these 307 and 316. We're gonna hold for that to fulfill. We're gonna have limit orders there. We're gonna be anticipatory traders. We're gonna take profits there. Hold a little bit for the moon, but as George Soros said, man, once that belief in the trend and reality diverge too much, it's going to come crashing down, and you're going to quickly see your P&L diminish, and it's going to be depressing. So the best thing you can do is just take profits at levels that you expect price to react at. Even if it doesn't react there, it's going to feel a lot better adding money to your account than just having to stare at the charts while the price crashes because you're trying to react to some shit. And that's the main lesson for today. Hopefully my prediction works out in the next couple hours and I look like a genius. And yeah, I'm going to start doing book reports once a week on YouTube. I got a lot of good books that I want to talk about. And if you want to talk about books, about trading books, maybe like we could get like a trading book club together where we just share recommendations, share notes. On my website, I have like notes on all the books that I've read, or all the books that I have not been too lazy to post up. There's some books that I need to put up there still. But I think, yeah, I'm going to stop talking. Anyway, until next time, good luck, good trading.